Inflation is the highest it's been in 4 decades, which is cause for alarm and reason for lawmakers to address it head on. And in the 2 days since Senate Democrats passed the Inflation Reduction Act and sent it to the House for its deliberation, we've heard all the snippets and sound bites on how the bill is not really what they say it is. Of course, nearly all of that talk is coming from those who voted against it, like Idaho Senators Mike Crapo and Jim Risch. They say, despite its name, the 700-page bill is not about reducing inflation, but just increasing taxes and scrutiny over who is paying them. President Biden promised those increased taxes would not be imposed on those making less than $400,000 a year. Critics say the president is wrong, and the act will actually raise taxes on everyone. Senator Risch claiming such in his explanation of why he voted against it on Sunday. These tax hikes won't affect just the highest tax bracket. Americans making as little as $30,000 per year will pay more to federal government because of this bill. And Senator Crapo saying nearly the same thing a week ago.
And during the 10-year period, the average tax burden would increase for nearly every income category.
Crapo, by the way, quoting the Joint Committee on Taxation, who put out the review of the bill, a committee on which Crapo happens to sit. Well, those two statements solicited these questions from you. Laura asking us to explain Senator Crapo's comment that anyone making $30,000 or more on taxes or will have their taxes increased under the bill. Where is he seeing this increase? Rick wanting us to tell him how the act will impact families that have $30,000 income, as Risch has stated. And Kim, well, can you please fact check Risch's comment about the new act increasing taxes for folks as low as $30,000? Well, we reached out to both senators, Crapo and Risch, and neither responded to our questions or requests for an interview. But Chief Political Reporter Joe Paris was able to speak with a Boise accountant to, in fact, fact check those claims about taxes going up for those making less than $400,000 a year.
National conversation continues to center on the Inflation Reduction Act. And depending on what side of the aisle you're on, you may hear two very different conversations. A major question, though, about the act. Does it keep the promise of President Joe Biden, who said the act would not raise taxes on people making less than $400,000 a year? Critics say no, supporters say yes. So we went nonpartisan for an analysis on the act. Boise CPA Jeff Beebe says he expects calls soon from clients.
I will this week. Yeah,
think so?
Once it really starts getting into the press, I'll have people start to call me.
A major question he will likely get: how will this act impact taxes? We asked Beebe to explain some of the language inside of it.
The tax rates aren't changing as part of the act, but there are some things that for corporations they're raising taxes, which they'll end up passing through to consumers. So while you may not be paying taxes directly, you'll be paying more for it.
While the individual tax rates for those making less than $400,000 doesn't change, the act does include a new 15% minimum tax on corporations that earn more than $1 billion in annual profits. The tax works to focus on some 200 U.S. companies that avoid paying the standard 21% corporate tax rate, including some companies that end up paying no taxes at all due to clever maneuvering. Experts say don't expect the major corporations to bite the bullet on paying new taxes.
You take Amazon as an example. Very early on, Amazon didn't make any money for years. So they had a big net operating loss carryover that they've been using up now that they're profitable. But it still is an offset that was legal to use, but very unpopular politically. So it's focused on companies like that, or that they're reinvesting large amounts of their income into other things that are deductions. They don't want all these deductions getting away. They're not going to just take a hit to the bottom line. They're going to pass that through to consumers.
So what could that look like?
Usually it would be a price increase. It might be lowering the rate of wage increases, although with our current environment of tight employment, you can't mess with people's wages too much. It's going to be in price increase.
So while tax rates might not change, low and medium earning Americans could see a cost associated with the new act. But tax credits built into the act for things like green energy and electric cars or Medicare benefits, well, those also are supposed to offset those costs. Beebe says he's also watching another part of the act, an $80 billion investment into the Internal Revenue Service, the IRS. The goal is to crack down on dishonest tax filings that cost the country millions of dollars.
Well, they're talking about hiring up to 80,000 employees, which is almost doubling the size of the IRS, and which will make a big impact on IRS audits. The IRS has kind of a tough job. They enforce a very unpopular law. Everybody understands that the government needs money to operate. They just don't want it to be my money. I want it to be somebody else's money.
So the IRS has more resources. I guess the logic here would be, okay, less underreporting.
Right. Yeah, they'll go after that underreporting. And that's underreporting from individuals is $250 billion. It's much larger from individuals than corporations or payroll taxes. And who's that going to go to? That's mostly going to be people that make under $400,000 a year. Again, that's not a tax increase because that's tax law that exists. It's just people aren't paying it. And the IRS is going to try and collect it. It'll be focused on people making under $400,000 because there's more of those people than there are over $400,000.
And there's a lot of, I guess, intricacy to get into this entire thing. And of course, we don't have time to go through it right now. But if you wanted to read more, and I recommend you do, go to our website right now, ktvb.com. We have an explanation of what's in the act, how it works, why it works that way, as well as we track this whole thing through. Brian, it's important to know this has not gone to the president's desk. This still technically has to pass another house over in Congress. When the president does sign it, that would start triggering, differences for CPAs across the country. They're going to have to look at things, but we'll wait and watch for now.
And again, we'd love to sit down with Senators Crapo and Risch to find out, get a little bit more explanation as to why they voted no and why they're saying the things they're saying about it. All right, thanks, Joe.